Thanks for being here. So everybody who's also here, thanks for being here too. And this is going to be a casual conversation with Doug, COO and president of Crexendo Communications. The symbol is CXDO, trades in the NASDAQ, and congratulations on getting included in the Russell, Doug. I saw that came out today, or was it?
Yeah, we just put that press release out today. I think we get added to the Russell Microcap Index next week, so pretty excited about that.
Excellent, man. So you've come a long way. You've listed on the NASDAQ after being on the OTC. And really what I want to do today, Doug, is there's going to be some new people on this call. So just give a real brief background on what you do, who you are, in easy speak, what you guys do and the problems you're solving. And then I want to get into maybe some of the, really the NetSapiens acquisition. You couldn't talk more about it on our last conversation we had a few months ago because you hadn't closed it yet. And I want to dig into that a little more. Get an idea of what you're seeing out there right now, since COVID-19, what you're seeing in the environment, and then talk more about your acquisition strategy. So those are kind of the three topics I want to hit on today, if you're okay with that.
Yep, that sounds great. Forward to it.
All right, take it away, Doug. Just give us the pitch, give us the background. Make sure everybody that if you're watching this video, listening to it, that you agree to the Little Grapevine disclaimers that you can see at littlegrapevine.com. And also just know that I do own the stock. So I wanted to let everyone know that.
Great. Thanks, Miles. Thanks, Ed. So Crexendo, we've always touted ourselves as the best kept secret out there in the UCaaS industry. And, with our acquisition of NetSapiens that was just formalized earlier this month, we're now the fastest growing UCaaS platform provider in the United States. So pretty exciting. So let me just give you a little background on Crexendo, myself, and then we'll talk about the acquisition and how it's going to really change the future for us and really in a very, very positive way. So I'm Doug Gaylor, as Maj introduced me. I'm the Chief Operating Officer and President of Crexendo. Been here for about 11 years now, and we've grown this thing from basically $0 in revenue from a UCaaS perspective 10 years ago to last year we finished with 16.4 million in revenue. And so last year was a good year for us. We finished strong, not only from a revenue perspective with the telecom increases of about 17% year over year. But when you look at the bottom line last year, we actually got a tax allowance adjustment. And so we had GAAP income of 7.5 million last year, or 50 cents per share. So that was a really strong finish for us. It was our second profitable year in a row. And as Maj talked about, those are some of the commitments that we made. So Maj and I have known each other for a little over 3 years now, maybe 4 years, meeting at the LD Micro Show a few years back. And at the time we were on the OTC, we weren't profitable, and our commitments were, hey, we were going to get to profitability, and we've since accomplished that. Then we committed to the fact that we were going to move from the OTC and organically uplist to the NASDAQ. We were able to accomplish that last year. Then we really highlighted the fact that we were going to go out and do a capital raise. We were successful in the S1 offering back in September. That raised about $12 million, and that allowed us to meet the next commitment that we've been talking about for a while, and that's finding a very accretive and good synergistic fit from an acquisition perspective. And that's where we are with NetSapiens, and that deal just closed on June 1st. So really exciting times. And the thing that Maj just mentioned with the press release this morning, we've been committing to the fact that once we got on the NASDAQ, we'd be included in some of the major indexes, and just real pleased that Russell just picked us up for the microcap index. And we get uplisted into that index effective next week. So our commitment to you as shareholders or possible shareholders is that we've been a really, really steadfast organization in meeting our commitments. And the NetSapiens acquisition really is a game changer for us. We did $16.4 million last year in revenue. NetSapiens did $11.4 million in revenue. They had a 30% year-over-year increase in 2020. And again, all things considered with the pandemic and the headwinds that 2020 brought about, they had a 30% increase. We had a 17% increase. Combined, the two companies had a 20% overall increase in 2020. And it's going to be a very accretive acquisition for us, and it's going to be a very synergistic acquisition for us. And so excited to talk a little bit more about it. We'll go deeper into it until we get into the presentation. So So that's just a little bit about me and a little bit about Crexendo, and appreciate everybody in the little Grapevine community obviously coming out and sitting through this presentation today.
Hey, thanks, Doug. One thing I wanted to ask you off the bat here, before we get into everything, really, what were you before NetSapiens and what are you now? I think that's really important kind of thing to dive into, and maybe you could dive into some things you couldn't talk about before that you can talk about now.
Sure, absolutely. So when you think about UCaaS, UCaaS is Unified Communications as a Service. So it's basically telephone services for businesses over the internet. And so if we think about the industry as a whole, the telecom industry traditionally has been premise-based telephone systems. So most businesses out there, just about all businesses out there, have a phone system. And today the statistics show that about 61% still have legacy premise-based equipment. And it's not a matter of if those businesses move to the cloud, it's when. And that migration is happening very rapidly pre-pandemic, and post-pandemic, it's even sped up that migration to the cloud even more so. So prior to the acquisition, Crexendo was a UCaaS provider selling business telephone services to businesses, utilizing the internet as the backbone. And we were selling in a direct fashion to end user businesses. And so that was a very successful model for us. Again, we grew that from $0 in revenue over the last 10 years to a $16.4 million run rate last year. Profitable for the last 2 years. And so selling to the end user customers, we would go out and meet with small and mid-sized and small enterprise businesses, find needs for their communication weaknesses that they had in their organizations. And we would put a Crexendo solution in for them and put them on a long-term contract where we had a very, very strong monthly recurring revenue process out of that arrangement. And so that's been a very successful formula for us. We've been talking about doing a major acquisition for quite some time and been looking for the right fit for our organization to help us grow and move us to the next level. And we found that in NetSapiens. So NetSapiens is a UCaaS provider. They do exactly the same thing that we do from a UCaaS perspective, with the difference of they don't sell to end users, they sell to UCaaS providers, similar to Crexendo, that then sell to end users. So if you think about that model, Crexendo is selling directly to end users through direct salespeople and through an agent program. And now we've acquired a company that sells a UCaaS platform to other UCaaS providers that are selling to end users. The reason that's important for you is that if you think about the industry as a whole, the two largest platform providers outside of NetSapiens is BroadSoft and Metaswitch. BroadSoft was acquired by Cisco 3 years ago, large acquisition, one of the largest acquisitions in our industry in the last 5 years. And so Cisco acquired BroadSoft to get that platform that was the dominant platform in the industry. And then just last year, in March or April of last year, Microsoft acquired Metaswitch, which was the second largest platform provider in the United States for UCaaS offerings. So now if you think about fast forwarding that, Crexendo has now acquired the third largest UCaaS platform provider in the country. So NetSapiens has 1.7 million end users using their platform. Now they're using it through those dealers and distributors out there. There's 175 of those UCaaS providers that are selling the NetSapiens platform to end users, but it's a very, very recurring revenue model, specific model for them. Their clients are much, much stickier. When we're selling to an end user, we're selling to somebody that's a small or mid-sized business. NetSapiens clients and customers, those 175 customers, are UCaaS businesses that are selling to end users. So the typical UCaaS provider that they have as a customer, may be doing anywhere from 2 to 3 million, all the way up to their largest provider that's doing upwards of 30 or 40 million. So it's a really, really strong fit for NetSapiens and allows Crexendo to have an offering now from a UCaaS perspective to go out after UCaaS providers and offer additional services to those UCaaS providers that we can monetize going forward.
So Doug, so help clear something up for me here and a little bit to understand it a little more clearly. So are they helping your competitors actually in some degree? Because you're a UCaaS provider also. So we are a UCaaS provider. We're selling direct to end users, and so there are 175 plus resellers that they have are also selling to end users out there. So to answer your question, frankly, are they a competitor?
they're not really a competitor, but those 175 resellers out there, could in a competitive environment on occasion run into a Crexendo. But if you think about the market share, Crexendo has about 60,000 customers today. Those are direct end user clients. So we're just a small blip on the radar screen. With NetSapiens, they've got 1.7 million end users out there. But even combined, we've got about 4% of the market share. So that's leaves a lot of market share out there. So we really look at the Ring Centrals and the Vonages and the 8x8s as our competitors, not necessarily the 175 NetSapiens resellers that are out there. So when we think about the size of the United States and the opportunity that's out there, could a Crexendo direct sales rep run into a NetSapiens reseller in Florida selling an opportunity? Potentially, but that's not really the goal here. The goal here is to go out there and maximize our penetration into the market and really beat out the Vonages and the 8x8s and the Ring Centrals of the world.
Great. And I want to come back to the whole platform thing in a second, but so it's becoming clear what NetSapiens brought to the table for you. Do you do anything for NetSapiens? Do you make them a better company, and why is it?
Yeah, we really do. So if you think about the combination of the two organizations, a lot of great synergies. So they've built their platform. So they've got a tremendous engineering staff that have built their platform from the ground up. We've got a tremendous engineering staff on the Crexendo side that's built our platform from ground up. Since their platform is much more robust and larger than our platform, over time we'll easily migrate our customers over to the NetSapiens platform. In fact, just this last week, we introduced the Crexendo VIP solution, which is our latest direct offering for our customers, and that's built on the NetSapiens platform. So we've already got synergies between the two organizations because we've already rolled out a new product that features the NetSapiens platform as the platform foundation for a new offering. So when you look at what we bring to the table and what they bring to the table, great synergies on the engineering side. They're a very engineering focused organization. They've been around for 18 years, have 1.7 million end users, but their revenue stream, as you can see just from the statistics I just quoted, is a little bit lighter than what it should be. So at $11.4 million, they've got EBITDA positive and cash flow positive last year, but they're not a marketing organization. And so what we bring to the table is a lot of marketing pizzazz that we can obviously take all their partners to the next level. As an example, we'll be down in Miami next week. Maybe we can meet up while I'm down there. So we've got the IT Expo in Miami next week. And so we'll have a combined presence with Crexendo and NetSapiens. And so again, from a marketing perspective, you'll see a lot of Crexendo coming into the NetSapiens offering out there so that we can help build that revenue stream. With 1.7 million end users out there, any new features, any new capabilities we come out with, we can monetize that almost immediately with that large customer base of opportunities out there.
Right. And one thing I want to understand too, Eric, every time I get into this space more and more, I realize how much I don't understand it. There's a lot. It seems so simple, communication, but there's still, unless you're really in it and using it, it's sometimes hard to understand these things. So, we kind of understand that if you're a UCaaS, a UCaaS kind of player here. But then this CPaaS thing comes up, right? And as we're digging deeper in this thing, we're learning more about that. When I think of CPaaS, communication platform as a service, right? I see the word platform in there. Now you're talking about platform, but you're not a CPaaS guy. So explain to me how you're different and why you're different. Or is UCaaS only one piece of a platform? Maybe, I don't know.
Yeah, UCaaS is one piece of a platform, and actually, from a CPaaS perspective, we have that offering today. It's not a Twilio type offering, but when we talk about communication platform as a service, that's one of the newest offerings that NetSapiens came out with last year. So if we think about our go-to-market strategy today, Maj, Crexendo's go-to-market strategy is selling direct to end user customers, and we do that through a direct sales team and a partner relationship. And the partners are really agents that are just selling our services. NetSapiens has, up until last year, been selling a facilities-based platform, which means that those UCaaS providers, those 175 plus UCaaS providers they have, they're buying perpetual licenses, they're buying the infrastructure, they're setting up their whole data center, they're responsible for putting all the hardware in and building that platform so they can go sell it to end users. But just last year, NetSapiens started offering infrastructure as a service, which is basically a communication platform as a service type offering, which means that now we can go out to resellers that don't have the desire or the financial backing maybe to go out and purchase all of the facilities required to be a facilities-based carrier, but they can purchase from us now an infrastructure as a service option, which means that they can use the NetSapiens platform. We'll host it for them, we'll provide all of the hardware, and we'll charge them a much higher licensing fee, but they don't have to worry about building their infrastructure. So that really is a communication platform as a service type offering. We'll expand that much more into a Twilio type offering over the course of the next year or two with applications for contact center, for texting. We've already got those applications in there, but to make them more robust and make them more flexible, you'll see more of those offerings out there. So when you talk about CPaaS and CCaaS, we've got a lot of acronyms in our industry, but CPaaS is Communication Platform as a Service. So we have that offering with our infrastructure as a service offering that we can offer our partners today. When we talk about contact center as a service, we have that built into our platform as well. So businesses that are looking for a contact center solution out there, that they don't want to buy the infrastructure, can use that on our UCaaS platform or on our facilities-based or our CPaaS platform.
All right, thanks, Doug. And just to remind everybody, if you have any questions, feel free to place them in the chat. I guess if you can also raise your hand and ask a question here verbally if you want to.
One of those questions. So Carlos asked if we were a NetSapiens client, and it's if you remember the old hair club for men joke that was out there, it was like we weren't a client, but when we started our negotiations, we actually saw tremendous opportunity. So we felt the negotiations were going in the right direction, but just to get a head start on it, we actually purchased the NetSapiens application out there, started building on it, and that's why we were able to roll out our VIP offering basically a week or two after the consummation of the closure of the deal, is because for the last 3 or 4 months we've been building that. So we actually purchased licensing from NetSapiens prior to the closure because we wanted to get a head start on that process to start building on that platform. So we weren't a NetSapiens account prior to our discussions, but through the discussions, we were to be able to roll that out immediately after we had the merger finalized.
Okay, Ed, have you had a question?
Yeah, sure. Hey, Doug. I know kind of over the course of this transaction, and by the way, congratulations again on getting this done. It's a big accomplishment. But over the course of the transaction, I know sometimes investors maybe heard the term merger, sometimes they heard acquisition, and I think eventually it's ended up as being more of a merger. And maybe you just kind of give some context to that. And then also on the last earnings call, I know Steve mentioned that his kind of vision and thought is the way for Crexendo to continue to kind of grow and going forward would be through additional mergers and acquisitions. And he saw that as sort of a fundamental strategy to the company. And I thought I was wondering if maybe you could give a bit of color to that too, as kind of how you guys are thinking about that.
Sure. So it was an acquisition. So Crexendo acquired NetSapiens. If you look at the initial press releases, it's all an acquisition based. Since the companies were similar in size, we were a little bit larger revenue wise, but similar in size, people wise, and focus wise. We talked about it being a merger because we wanted to bring the companies together and highlight the fact that it's 2 companies coming together as a merged organization. But Crexendo did acquire NetSapiens. The management team is being primarily run by the Crexendo folks. We did bring the 2 executives, co-founders of NetSapiens onto our C-level team. One is the Chief Strategy Officer, Anand Bush, and one is the Chief Technology Officer, David Wang. So we're extremely excited about having them on the management team leading the company going forward. But it is a merged organization. Crexendo is the organization going forward. NetSapiens will keep that name relationship for the time being because they've got a strong relationship with their community out there. And so we want to make sure that relationship stays extremely rock solid. So from an acquisition perspective, it was a great acquisition for us because the way that we positioned the deal was a cash deal and a stock deal, but the cash was a $10 million component of the $50 million purchase price, $40 million in stock. But of that $40 million in stock, only about $3 million is actually dilutive at this point. The rest of it is stock options for their employees. And so it's it was a really, from an overall perspective, it was not very dilutive at all to our shareholders. So as Steve has mentioned, this is kind of the first domino. And when I talk about the first domino, we've been looking for the right acquisition for a long time. And Maj, you and Ed and I have talked about the fact that we could have gone out and bought a BroadSoft reseller. We could have went out and bought an Asterisk reseller or a Metaswitch reseller. But that would require a lot of time and effort to migrate those customers over to our platform. That takes a Herculean effort to move those clients over. So now that we've acquired NetSapiens, it really gives us what I like to refer to as a stocked fishing pond in our backyard. So those 175 UCaaS resellers that NetSapiens has, they're organizations that we would be ideally suited for an acquisition opportunity with. So out of those 175 resellers out there, you have to figure that at any given time, 5 to 10% of them might have an exit strategy that says, hey, if I'm going to try and sell my UCaaS company, who would I go out there and sell it to? Well, now the obvious person to come knock on the door would be to come on knock on Crexendo's door because, we own the folks that own their platform today. And so that roll-up strategy makes a whole lot of sense in the fact that, anybody out there that's got a NetSapiens platform, if we were to acquire them, would be a very easy, very synergistic migration over to the same platform that we're currently using. So that makes a whole lot of sense for us. So that stocked fishing pond analogy, it took a lot of time and effort. In fact, I met the NetSapiens folks when I met with you guys last year in February. I was down in Fort Lauderdale to do the little Grapevine show down in Fort Lauderdale. But the 2 days prior, I was in Miami for a meeting. And that's where we actually met the NetSapiens folks and started our conversation. So it took a little bit over a year to make that acquisition finally come to fruition. So since those acquisitions take such a long period of time, that tells you that it's not easy. But the fact that now that we've made this acquisition of NetSapiens and we have 175 NetSapiens resellers out there, the next opportunity for acquisitions should go much quicker, much smoother, and the integration would be much quicker because that's an easy migration, very synergistic. It wouldn't be the same type of multiples that we're talking about with NetSapiens. So we paid about 4 times revenue for the NetSapiens acquisition because we got a lot of technology out of it. So it wasn't only a revenue play, but it was a technology play. And so if we think about the multiples that we would look at for any potential resellers out there, it would be a much lower multiple. And that really aggregates into a great market cap opportunity for us. If you think about merging the two companies, the Crexendo market cap prior to even announcing this, was around the same market cap that we've got today. And so when you look at the combined company and the pro formas of the two companies, we're a $28-29 million company with the pro forma of NetSapiens and Crexendo combined. And so that really hasn't resonated out to the market yet. So I think that we're completely undervalued because the market really hasn't realized the fact that, hey, we're going to be adding $11.5 million worth of revenue on a pro forma basis for 2021. And so if we look at that growing forward, that's a huge opportunity for us to increase that market share capitalization opportunity.
Thanks, Doug. And I should mention that I am also a shareholder in Crexendo. Doug, on the combination of the two companies, can you talk about any opportunities there are for cost savings? I think Steve may have touched on that too on the last call and just talked about how, if you've got, for example, 2 data centers or duplicate of certain things, obviously it takes a few months or even, or more than a year to get some of that consolidated. But as you've gotten into this a little bit, have you started to see anything there that you think will come to fruition?
We do. And so obviously when we put two companies together, the first thing we need to do is roll up our sleeves and find out, who's on first and what's on second. And so that's what we've been doing over the last couple of weeks. Fortunately for us, their offices are in La Jolla, California. And so it's a nice getaway from us when it's 115 degrees out here in Phoenix to head over to the coast in La Jolla. So no complaints there. But through those meetings, we've already identified lots of opportunities for synergies. And so we do see cost synergies opportunities within the organizations. We have a tremendous amount of synergies between our management teams. We've already integrated a lot of different ideas and discussion points. And so over the course of the next couple of months, we'll see some tremendous opportunities for cost synergies and really working on how we bring those organizations together.
Hey, thanks, Doug. I had one question on the acquisition thing real quick. So you kind of talked about how NetSapiens maybe solved like the platform, the product problem. You have a much bigger, better product line now, a complete product line. And then maybe you're going to go into maybe acquiring a reseller at some point to help with the marketing and push of your product. But are there any product features that you're going to want to, that you don't have now that you wish you would have, maybe that NetSapiens didn't fill, that you're going to be searching for?
Yeah, good question. So let me address that twofold. So one, when you think about our go-to-market strategy now with an agent program that Crexendo had and the infrastructure as a service program that Sapiens has and the facilities-based offerings that Sapiens has, it really allows us to fill the trifecta basically. And so when we think about our competitors out there, nobody has all three offerings under their offering out there, not the RingCentrals, not the Ciscos, not the Microsofts. And so it allows us to really go out there and be extremely competitive. Next week when we're at the IT Expo, we'll be out there recruiting potential partners, and partners will be able to come up to the Crexendo NetSapiens booth now and say, well, I really want to have my own platform and I want to buy everything. Great, we've got a facilities offering for you that'll fit perfectly. They may come to the booth and say, I really want to have my own UCaaS type offering, but I don't want to have to build the data center out. I don't want to have the infrastructure and the hardware. Great, we've got that option for you as well. Or the third option is they may come to the booth and say, hey, I'd like to sell UCaaS, but I don't want to handle the customer service. I don't want to have to train my people. I just want to go sell it and be able to have a revenue share on it. Great, we've got that option for you as well. So we really have the trifecta going for us from anybody that wants to be in the UCaaS industry and have three offerings that they can really pick and choose from. To your point, Maj, about things that are out there that maybe we didn't have that are pretty critical. Crexendo, up until the acquisition, didn't have a Microsoft Teams integration. Microsoft not only bought Metaswitch to get into the UCaaS industry, but they've had a Teams offering out there for quite some time. Everybody's probably familiar with Teams from just like the Zoom meeting that we've got right now. That's video conferencing, it's collaboration. But Teams also has a UCaaS component to it. Microsoft doesn't really push that much. And so most businesses out there that are using Teams, they want to have a UCaaS offering, not necessarily from Microsoft, but a UCaaS offering that integrates with their Teams application. And we have that now. NetSapiens has built a Teams integration solution out there that now we have available to roll out. In fact, NetSapiens has over 240 APIs. APIs are basically interface links for any software applications or programs out there. So Microsoft Teams, Salesforce, Zoho, you name it, they've got integrations for it. And so it allows us to have a go-to-market strategy now to go after Microsoft Teams customers, to go after basically the whole gamut out there and really be able to cover all the bases.
Thanks, Doug. So anything else you want to talk about on the NetSapiens and acquisition strategy before we move on to the environment?
Yeah, so again, we just think it's just a phenomenal opportunity for both organizations. Great synergies, tremendous opportunity for growth. With 1.7 million users using the platform out there, when we come out with things like the Microsoft integration, come out with collaboration. We've got a collaboration tool that NetSapiens had developed very similar to this Zoom screen that we're on right now. So we could be doing the same presentation with our NetSapiens platform, now our Crexendo platform. That's a collaboration. So we cover all of the bases when it comes to the technology aspect. The last thing that I'll highlight is international opportunities. So when we think about Crexendo's presence pre-merger or pre-acquisition, we were focused 100% here in the U.S. NetSapiens already had an international revenue stream. One of their largest resellers is down in Australia, so they've got a few Australia resellers. And just last year, they started working in the Europe and the EMEA market. And so with a UK presence currently, we're growing that European market. So it allows us to really tap into the global market as opposed to just the US market. I mentioned earlier that the US market is still 61% untapped that hasn't moved to the cloud for communications. Those numbers are even larger globally. So if you think about the other countries out there, their adoption is even slower than the US. So tremendous international opportunity as well.
Thanks, Dan. Actually, I do want to ask one thing about the NetSapiens acquisition. So you might have said it already, or maybe I missed it. Gross margins of NetSapiens compared to your gross margins. And one thing is, I believe your recurring revenue, percentage recurring revenue is higher than NetSapiens. I think they're at 50% recurring revenue.
Correct. They're about 50% recurring revenue. We're about 85% recurring.
Okay, so help me explain why, what that means. So should that concern investors at all, that will there be lumpiness because there's less recurring revenue, as a percentage of revenue? And why is that the case? How does NetSapiens model work where that is the case?
Yeah, so NetSapiens model, you have to understand that as a smaller privately owned company, cash flow is critical for them. And so the reason that they were selling a facilities-based solution was to get that cash up front to be able to fund the business. The reason that they introduced the infrastructure as a service offering last year was because cash flow was becoming more consistent. So it allowed them to go out there and have a higher monthly recurring by using infrastructure as a service, as opposed to having to sell all of the upfront items. And so as you look at the model going forward, there'll be a much higher concentration on the infrastructure as a service, because it allows us to have a much higher monthly recurring and much less impact of that ebb and flow of the one-time sales. And so if you look at that 50, I think it was actually about 55% recurring revenue last year for NetSapiens, that was about 45% the year before. So you're seeing that recurring revenue stream pick up tremendously on their part, because more and more of the options being offered are the infrastructure as a service, which has a higher monthly recurring component and a much smaller one-time component.
Excellent, and that should improve their gross margins moving forward as that trend continues.
Yeah, their gross margins were a little bit less than ours, but not drastically. So our gross margins at the end of 2020 was about 68%. I think actually Q1 was about 68% on the UCaaS side, and I think NetSapiens has been running in the mid 60s. So it's not a huge variant from where we are, and I think combined we've got an opportunity to increase those gross margins easily.
Great. Now let's move into the competitive or the environment in general in the UCaaS space right now, or the whole cloud communication space in general. You actually mentioned something interesting. You said right now 60% of small businesses haven't basically adopted an off-premise solution or a cloud solution yet. Previous in your presentations, I think you were at 70%, right? That's come down a little bit. So COVID-19 has pushed some of that forward a little bit. I just wanted to get your sense on. Sure, a lot of companies want to do this. And given that what happened to COVID-19, are they in a situation where they can financially do it? Are you getting pushback? Hey, we want to, but we want to wait till next year maybe to see how things are going with the recovery of the economy.
Yeah, I think that the pandemic slowed decisions down a little bit initially, and then we started seeing it pick up speed, and we had that little bit of a second wave that kind of slowed things down. I think that now the businesses are opening back up, and the pandemic, hopefully knock on wood, is in the rearview mirror. We're really seeing that gravitation towards, hey, what didn't work for us during the pandemic and how can we fix it? When we think about an investment in UCaaS, it's not an expensive investment. In many cases, it's saving them money over their legacy premise-based solutions. But it's that education that businesses need. In the past, the attitude was, hey, if my phone system's not broke, don't fix it. And the reality is that their mindset was, it's not broke because the phones ring, they do this, they do that. But when the pandemic hit, they realized that their phone systems were broke because they didn't have any flexibility. You couldn't take an old Toshiba phone system or an old Avaya phone system that was not cloud-based. When the pandemic hit, you couldn't just pick your phone up from your desk and take it home and plug it in at your house. It didn't work. And that's the challenge with the old legacy-based phone systems, is that they're not cloud-based. They have to be hardwired into that equipment cabinet back at your office, and so they don't have that flexibility. So all these businesses that made it through the pandemic made it through the pandemic with people using their cell phones, with the office numbers forwarded to a cell phone. But once I got it to my cell phone, I couldn't transfer it to somebody else in the organization. So it really allowed for, quite frankly, in the last year, pretty crappy communications for a lot of businesses. And so as they come back into the fold now and they're coming back to the office, they're realizing that, hey, our phone system really didn't do us justice during the pandemic. And so those businesses are looking at, hey, how do I make it better? Because the reality is that before the pandemic, 15% of the employees out there worked remotely. At the peak of the pandemic, it was 80% of people working remotely. And now the statistics show it's probably still 45, 50%. Those numbers are going to be much, much higher. So businesses are going to have to adapt to having mobility and having collaboration and having the capability to have people work from anywhere. So that plays right in with what our space is. And as I said earlier, that 60% that's not on the cloud, it's not a matter of if they move to the cloud, it's when. So if you think about it, it's, I use the analogy all the time of this smartphone is that when everybody had a Motorola flip phone, that was the greatest thing since sliced bread. And then Apple came out with the iPhone, and then Android came out, and all of a sudden, within a few years, everybody's got a smartphone. Now it would be hard pressed to find anybody with a flip phone. That's going to be the same thing you'll see with cloud communications in the next 5 years. 5 years from now, when we're doing this presentation, my statistics are going to show that, hey, there's only about 5 or 10% of the businesses that still have legacy-based stuff. And that's the same people that are walking around with a flip phone today.
By the way, Doug, I did have a flip phone sighting last week.
Did you really?
Yeah, it's pretty funny. And he was bragging about it. Okay, whatever. Well, I want to know, through COVID-19, did you see any weaker competitors die off?
We didn't see a lot of competitors die off, but we saw some challenges that, companies that didn't play their cards right. So, over the course of the last year and a half, 2 years, you saw companies like Fusion and VTT that had, tremendous challenges because they bought off more than they could chew, and they didn't manage the business well. I think with COVID, especially in our industry, our industry survived pretty well through COVID because people needed our services. And so, when you look at our competitors of RingCentral and 8x8 and Vonage, everybody had, significant increases in revenue over the course of the last year, as opposed to a lot of industries that, saw a decline in revenues over the last year. So we haven't used COVID as an excuse of slow growth. It maybe slowed growth a little bit, but, still at posting 17% year-over-year growth, during a pandemic, I'll take that any day of the week.
Great. And I just one final question from Mike. Then we have a couple more questions from the chat, I guess. Where is obviously Microsoft wants to get involved in this industry, in the UCaaS or whatever you want to cloud communication offerings. They're going to go head to head with RingCentral, and I would assume someone like you at some point. Where are they in that process? And I guess now even with NetSapiens, you can actually grow with them because what you got going on now. But maybe answer those two kind of questions separately.
Yeah, so Microsoft, they've been in the telecom space since they acquired Skype, 10 plus years ago. So they've never really made a dent in it, and even today with their acquisition of Metaswitch, that was a large acquisition that really gave them a good amount of traction in the UCaaS space, and they really haven't done anything with it except alienate some of their Metaswitch resellers out there. So they're not really taking advantage of that. Teams is a great collaboration offering, but they really haven't enhanced it much from a UCaaS perspective. And that's why we can go into a Teams environment with our UCaaS solution with Teams integration and blow Microsoft away because it's got so much more functionality to it. If Microsoft were to go out to a Teams customer today and say, hey, we're going to give you a contact center, we're going to give you a call recording, we're going to give you all of these capabilities, they'd be really limited in their offerings. Where we can go out there with our UCaaS offering and say, oh, you want contact center, you want call recording, you want all of these auto attendant options, you want all these flexibilities. Great, we've got that. Oh, and you want your teams to be integrated into it. Great, we do that as well. So although Microsoft is a big competitor, they really haven't done much in this industry to say that that's where they want to play. They've dabbled around in it, but it's not their core competency, and they really haven't spent a lot of time on trying to figure out how to take it to the next level. I think we'll probably be more successful with our Teams integration than Microsoft will be successful with their UCaaS offering through Teams.
Great, excellent. And we have a question here from Tom Burney here to wrap it up here. Obviously, if you have any other questions, anybody out there, you can get them in now. So, what is the biggest risk with the company?
I think when you look at the space out there, there's so much opportunity out there, and I think the biggest risk is not figuring out how to take advantage of the opportunity. I mean, I think from a management perspective, we've got to look at it that we've got two organizations that we just put together, and so there's tremendous opportunity to grow the organization and grow it correctly. And so the biggest risk is not executing on our game plan. And I think the opportunity for us is that we're a very focused management team. I mentioned earlier all the commitments that we've made and how we've been able to execute on those commitments and meet those commitments. To me, if we were looking at the success and the failure rates of acquisitions out there, I can tell you that my previous life as a manager at my previous company, we did a lot of acquisitions. And those acquisitions were all successful because we had a cookie cut way to do that. And so, the risk when you have two organizations coming together is you miss management and manage merger and things happen. That's not going to happen with us. So, my commitment and my dedication is to make sure that this is a great merger for us that really propels us to the next level. When I think about the opportunities out there, our risk is not acting quick enough and not being able to grow fast within this industry. So this merger allows us to really have a serious foundation to build on. And that building of the foundation is future acquisitions, future roll-up opportunities with our stock fishing pond. To me, this is a home run for us.
Hey, Doug. Another question. I know you guys announced this recently that you hired a chief revenue officer with John, and
Yep.
I thought for the Grapevine community, maybe just give a little background on John and kind of the importance of the role that he's going to be playing there at the company too.
Yeah, great. So we did bring on John Britton back in November as our chief revenue officer to join the team. Up until adding John on, I was wearing a lot of hats, not only the president and chief operating officer, but the lead sales guy out there on big opportunities and doing a lot of the trade shows and trying to drum up the next revenue stream. And so John brought a tremendous amount of talent. John was actually part of our former company, Intertel, and I've worked with John for 20 plus years out there. He grew with Mitel after the acquisition of Intertel to the president of their UCaaS division for many years. Left Mitel after Mitel did a major reshuffling when they went private. Mitel went private. Private equity came in, bought them out, and made a lot of changes. And so John took an exit package at that point and went to Avaya for a short stint. And Avaya wasn't any better shape than the Mitel challenges he had. And so he realized that the opportunity with Crexendo was tremendous. Steve and I have been working with him for quite some time, and so it was just a really great synergistic fit. So John came on, his whole focus has been how we grow the revenue stream, and especially combining the two organizations, he'll be able to help propel that to much higher levels. Great contact, great initiatives on the channel side. He'll be down at the IT Expo with me next week. So if you and Maj or any of you guys want to come down to the Miami, if we want to try and line something up in Fort Lauderdale, great to try and do that. So.
Sure. Sounds good. And then one last question for me, and then I see another question in the chat. But I know another important component of the revenue is the partner channel relationships, and that's been growing at a pretty nice pace here. Could you kind of give any insight on the growth difference between new versus existing channel partners versus maybe some new ones that you're working on getting?
Yeah, so obviously, our growth has been fairly consistent over the years, and a lot of that is due to our sales through our channel partner on Crexendo. So prior to the merger, 75% of our sales and revenue were coming through our agent partner program that we had on the Crexendo side. If you look at the NetSapiens side, obviously 100% of their business comes from their partners and community resellers out there. So as we look at growing that going forward, we anticipate that we'll be able to have significant growth within our existing partner relationships, but also adding new partners to the equation. Now, last year in 2020, NetSapiens added 23 new resellers to their organization. So that's a huge opportunity. And a lot of those resellers, are coming from a BroadSoft or a Microsoft Metaswitch platform. So they're looking for alternatives. And if they're looking for alternatives, NetSapiens is a great solution for them, and it's a much less expensive solution. So a NetSapiens platform compared to a BroadSoft or a Microsoft Metaswitch platform, could be upwards of 40 to 60% less expensive on a monthly basis for a UCaaS reseller. So it's a tremendous opportunity for them to make more margin and be more successful in their endeavors. So that partner community is going to continue to grow on the Crexendo side. It's going to continue to grow on the NetSapiens side. So you'll see growth from not only new partners being added, but obviously from existing partners having more and more success.
Got it. And were there any partners that you guys shared between NetSapiens and Crexendo?
There really wasn't, and again, it's mainly due to the fact that it's really three different type approaches. So our partners didn't want to have the responsibility of having their own data centers and their own customer service and their own technical force, and so they relied on us to provide all that on a purely revenue share basis. Where the NetSapiens resellers are really platform providers, white label providers, and so there really wasn't any overlap whatsoever between the two organizations. So that's again why it's a nice synergistic fit, is that now we've got all three options available out there to really cover that trifecta.
We'll do one last call for any questions for Doug. Go ahead and type that into the chat. I've got one here from Manrique, and Manrique asked, what is the organic growth estimation for the next 3 years?
Yeah, great question, Manrique. So if you think about where we are today, combined, the two companies had 20% organic growth year over year in 2020 from 2019. We anticipate that growth should be in the 20 to 30% organic growth range. And if you factor in inorganic acquisition opportunities, could obviously be much higher. But I think there's no reason to see that Crexendo's growth is going to slow down. In Q1, we actually had an increase from the 17% in our UCaaS service offerings to 21%. So Q1, you actually saw an increase on the Crexendo organic growth. And I anticipate you'll see that with the NetSapiens side of the equation as well.
And Manrique has a follow-up on that. And he's asking, are acquisitions required to keep up the growth that you've had so far?
Yeah, not required, but obviously are a nice additional aspect for growth. So if we think about 20 to 30% organic growth, and if we factor in acquisitions on top of that, you could see us potentially doubling in size in the short term. So this acquisition, when it's all over and done with, will take us from a $16.4 million at the end of 2022. We don't give forward guidance, but if you just do the math on what the pro forma was for 2020, that combined entity was almost 28 million. And so just with a little bit of organic growth, we could almost be doubling our size from 2020 Crexendo standalone to the end of 2022.
Great. Maj, I'll kick it back over to you. Any final words? I think that's it from the chat.
Thanks, Ed. Yeah, Doug, that's it, man. Well, thanks for doing this today. I'm glad it's been a while since we had a live chat with everybody in the little Grapevine community. So I appreciate you being here, and hope to have you here back soon again, Doug. Yeah, we'd love to see you in Florida when you're here.
Great.
Yeah.
Yep. Really appreciate the opportunity. I love the little Grapevine community. These meetings have been great for us, and hopefully everybody out there that hears the story sees the opportunity. We really feel like we're at the ground level of something that's going to be pretty sensational. And so always excited to tell the story, and love telling it to the little Grapevine community out there. Anytime,
Doug. And again, we've been here with Doug Gaylor, COO and President of Crexendo Communications, trades under the symbol CXDO under the NASDAQ. Geo Investing has a lot of research in the company, actually. If you want to come and see that, we've been covering the stock for years, as well as the whole space. There's a few companies in the space we're talking about, all approaching the market differently. So I love that about it too. Anyway, so great, man. Thanks, Doug. Thanks everybody for showing up, and we'll see you again.
Thanks, Maj. Thanks, Ed. Thanks, everybody. Take care.
Bye.